Welcome everybody to our next webinar here at JFD Brokers. My name is Stefan Friedrichowski, as always. Um, Today we have the 17th of January 2018, so half of the first month of the year is already over. And we have the next topic. And our topic today is about trading Bitcoins. But also in the name of JFD, first of all, a warm welcome here to this kind of webinar. Yeah, as always, you will find already the slides ready for download via the GoToWebinar control panel. And you see already here on my first slide my contact address, my email address. So if you have any further questions or if you like to get those Excel sheets, which I will show later, just send me an email and I will make sure that you get those Excel sheets as soon as possible. So it might be a little bit difficult for me, but I will manage how to do it. The simple reason is tomorrow I start my holidays. But in February, I will be back for the next upcoming webinars anyhow. So I will make sure that you can get those Excel sheets if you like. Trading Bitcoins and what about the statistics is the title of today's webinar. Trading Bitcoins, maybe you have heard a lot about Bitcoins in general. And of course, I will make a very brief introduction to Bitcoins overall, but not really meant to be a real introduction because I'm only interested in trading of Bitcoins and not really of what's behind the scene. It's interesting, but that should not be the topic of this kind of webinar. And you will find a lot of information about that on other places or simply in the internet. So we will look to Bitcoins more from a trading perspective. So that's what I intend to do today. But before really starting, I have always to show this kind of slide. Later we talk about trading strategies regarding Bitcoins. And of course, the rule is always the same. If you trade always on your own, and that's mentioned here on that risk disclaimer, but I think everybody knows about that. So let me go back to what are really the topics in detail today. So after a short introduction to the world of Bitcoins and what's a little bit behind the scene, I just want to make a comparison, first of all, and I will compare Bitcoins, or better to say BTC USD, because it's an exchange rate between Bitcoin and USD. We will have a close look here today. And since the price of Bitcoins is more or less around 13,000, and that's the same level the DAX has right now. So I know DAX is a CFD and not Forex, but since the two prices are quite close to each other, it's easier to compare those Bitcoins and or BTC USD against DAX instead of Bitcoins to Euro US dollar. The prices are easier to understand, and therefore it's easier to compare those two. Knowing that a couple of years ago, Bitcoins have been just a few points, 4 points or maybe 100 points. But at least today we are above 10,000, and therefore that comparison is easier to do. Just get a question here about the webinar and recordings. Yes, of course, the webinar is recorded, and you will find the recordings later on the JFD YouTube channel, as always. And I mentioned that especially here because you will see that we apply 3 well-known and already introduced trading strategies, which you find already by name here on my introductional slide. The details of those strategies are in webinars we have had already. So if you want to know a little bit more about that, just look for those and you will find the recordings of those webinars, and then you will have all the in-depth details of those trading strategies. So we will start with comparison between Bitcoins and DAX, but and we especially have interest in volatility in here to see how markets react, especially the Bitcoin market now. And the other thing is that we want to trade Bitcoins, and therefore it's we must have a look to the spreads, because those are costs involved in our trading activities. And since my last webinar was about brokerage at all, and the history of Bitcoins is more or less a short lesson about brokerage. So it's a little bit of an extension of my last webinar, because what has happened? You all know at JFD it was possible to trade Bitcoins last year. I'm not sure when it started exactly, but maybe around October or September. And trading Bitcoins has been stopped in December. And the simple reason is not that JFD has stopped trading Bitcoins. No, it has been the liquidity providers. So the real banks behind all of those trades, which your trade, your order is always processed to that liquidity pool, and that accumulation of those banks, they decided to stop trading Bitcoins. And that was the reason to have that stop. And the reason behind, I can only guess, and we will see. And that's really a nice story, or at least it's my interpretation. To be honest, I have no detailed knowledge about what has driven the decision, but it has to do with brokerage, and it has to do with the market makers. And finally, those banks, they're behind the liquidity pool, they are the market for us. So in that sense, they are a market maker. And it's not JFD, by the way. And finally, if we know a little bit more about the statistics of Bitcoins, then we can check, hey, we have three well-known strategies: mean reversion, slightly martingale. Oh, there's still a German word on my slide here. Leicht means slightly. And then price action, finally. All strategies, I think B and C, have been introduced only a couple of weeks ago. Mean reversion is a little bit older, but we can use, with the knowledge of the statistics of Bitcoins, we can apply what we learned about other trading strategies, and we can apply those rules with different parameters, and and then we can trade Bitcoins profitable. And that we will see finally. Okay, but as I mentioned, a short introduction to Bitcoin. So, of course, Bitcoin is a cryptocurrency, and more or less, and there are several cryptocurrencies. There's more or less an inflation of those cryptocurrencies, like Ethereum, Ripple, and you name it. And sometimes all are called Bitcoins, which is definitely wrong. There's only one Bitcoin, and that this is with a short symbol BTC, and that's the one we look today. So there's a very well-written article on Wikipedia, so I put it here, and you can have you can learn much more about the Bitcoins. And how they are created, how they are managed, how they are transferred, and so on. So it's a nice article, but let me do the short summary here. So the main, let's call it, features of Bitcoins. Bitcoins is a real means of payment. So it's real money. It's virtual because it's only exists only in the computer language, so to say. We don't have coins. We have no notes written with Bitcoins, but it's a payment methodology. So you can really pay invoices in Bitcoins, And up to now, there are more than 100,000 shops and stores where you can buy something for Bitcoins. So it's real money. And regarding this, all the ongoing discussion about Bitcoins and is there a big hype and is there a big bubble or something like that? I don't care. Currently, it's a payment. It's a means of payment. It's money, and we can trade it. And that's what's important for me. The volume of money in circulation, and not all is already circulating, but the volume of money is restricted. And that's to 21 millions, which is nice to know because you might compare that money restriction with what our federal banks are doing. They print money if they want, and they did it in the last couple of years, enormously. But that cannot happen with Bitcoins because the total volume is limited to 21 millions. So that's good that it is restricted. It's a little bit more like in older times when we have had the situation that the circulating money has been covered by gold. But that's not, I think it's a couple of decades ago, that connection to gold is not anymore valid. And since then, we have that just printing money is possible as well. I like the comparison because the total amount of gold is limited as well, at least as long as we stay on Earth and don't go to the outside universe here. Then the total amount of gold is restricted as well, and it's difficult. It costs money to get gold, to mine gold, and that's, by the way, the reason why later, so still you can create Bitcoins, but only those which are then finally circulating out of those 21 millions. And that's the reason why that process is called mining. That's done by complicated calculations, and the higher the price of Bitcoins, the more complicated it will be. It's just something within computers. Anyhow, you can do it. You can even do it by your own. But then you are part of the overall Bitcoin community as well. What's else important? Transactions are done decentralized and pseudo-anonymous. What does it mean? Transactions are not stored like you go to your webpage of your bank account, and then you transfer money from A to B, and then your bank will do the rest. No, in this case, it's decentralized. It's stored around the world at several thousands of computers, and it's called pseudo-anonymous simply because one knows the Bitcoin account behind, but one does not know the name behind that account. So in principle, everything is open, and everybody could see any transaction from A to B to C to D, but you only know those valid account numbers, and so you don't know the persons behind. All transactions are stored, and they are decentralized by a so-called blockchain. And to be honest, that methodology of blockchain is a real hype behind. It opens several other possibilities which might happen in future. It's like to have a contract between two persons. Normally, you exchange documents, you sign them, and still you all believe that those documents are not changed after signing. Here, it's much more easy because one would distribute the document decentralized, and you cannot change it afterwards. It's simply impossible. And therefore, that blockchain development or invention. There is a real hype behind, and we will see lots of other applications of that as well. I mentioned already that mining process, and that's how to create new circulating bitcoins out of those 21 million. And that's done by a complicated computer calculation. What's important for us as a trader? We trade currency forex pairs, and in this case, we trade pairs like BTC USD or BTC Euro, and yeah, that's what we want to trade. And I hope that within a couple of weeks or months that we can trade those at JFD once again. But first, now let's have a quick look to the Bitcoin price right now. So there's a nice internet address which is called bitstamp.net. And I open that here because it shows you a little bit more what happens trading Bitcoins. And what you will see here is, yeah, it's like a real stock. And now, I have not been aware that the Bitcoins are already below 10,000 right now. But what we have here is simply a chart, like charts we know from any other trading platform. But we have a little bit more, because in this case, we have the order book as well. And all the three other things here around are representing that order book. And on the left here, you see every committed transaction. So that's what's running down here. On the right, you see all the prices and volumes where people would offer or buy. And that's what you see here in red and green. And finally, what you see here in the middle is something like the order flow or the order book in a more graphical way of use. So it's simply the same information which is in the right-hand table, but now in a graph. And what you can do with those kind of pictures is you can try to interpretate the order book in order to get a feeling of what might happen next. What's always here of interest are big orders, well, at least bigger orders, because they might be something like a resistance. So because they will not go through immediately, because they would not match between people who buy and people who offer. And those you can see in that graph here. Whenever you have those stepwise behavior, you can see, for example, the 11,000, so a round number. That is a good example. So there are much more orders in place than at other positions. But because I looked to that web page a couple of times now, the order book is getting thinner and thinner. So it's getting a little bit dangerous right now. So maybe the volatility will increase once again, because with some bigger orders, you can really move the market here. Order books are normally not what we do in our own trading activities. We don't have access to order books, but in this case, you have a real insight into the order books of Bitcoins on that web page. By the way, that web page is really a computer killer, so I close it now because it takes a lot of resources of the computer. But that was a price. Right now, around 10,000. Okay, but now let's go a little bit more mathematically here. So what we want to know is we want to know more about the volatility in Bitcoins, because volatility is one extremely important aspect when it comes to trading. We will start here only on D1 base. And by the way, then we include the weekends, because Bitcoin prices are available around the week. I restrict myself to D1, although I would have data for smaller time frames as well. But you will later see from a trading perspective, going down the road to smaller time frames is not a good idea for Bitcoins, because I give you already the reason here. The relation between movement and spreads are not good enough going down the road, going to smaller time frames. So let's restrict ourselves to D1, because then we can learn already everything we want to know. And in order to get a feeling of volatility, I use two methodologies. One, I look for a certain D1 candle and compared the high minus the low. So that was the overall range of the day, of that day. But since Bitcoin is, a couple of months ago, it has been at 100 points. Now we are at 10,000. Therefore, it's better to do this high low comparison, not absolutely. It's better to do it in percent. And the same we do for the close to close comparison. So the close from one day to the close to the next day. And that will give us a very good feeling about the overall volatility, and especially if you do it in comparison to the DAX value, because the DAX is, let's say, more familiar for everybody than Bitcoins or something like that. I mentioned here my data sources. At those web pages, you can have access and can download data. Let me only show you one in detail here, and that's the last one, that's kaggle.com. That's not a real trading platform or data source. It's the data source for nearly everything. And there it's even possible that you can have data on a 1 minute base. And starting at 1st of January 2012, you need to be registered here, but doesn't cost anything, and you don't get boring emails afterwards, only from time to time, but it's okay. And then you can download here even Bitcoin prices on M1 base. There are not very many data sources for Bitcoins on smaller time frames than D1, but here's a good one. So if you're interested in those, no problem, you can download them here. So we do our analysis on D1, and let's really start doing that. So what I did is I put those data and I started, you will see here on my left hand side, I started with April 2013. The reason is Bitcoin has been around 100 at that point in time, and I don't want to go further down. So we start in 2013. So we have about 4 years of history right now. Yeah, and then I did what I mentioned, the comparison high minus low in percent. And later I applied an SMA 30 on that. That would be a month's of time, because weekends are trading time. And I did the same for close to close. But now, first, let's go back to the price. The price we know already. Of course, for Bitcoins, there's only one y-axis possible, and then it's logarithmic axis. And even scale it logarithmic, you see we have an increase in slope here, which means it's more steep than even an exponential growth, which is something really crazy. But since now we are back at 10,000, so we have a good correction right now. So, but anyhow, since 2015, there has been a huge increase in price of Bitcoin, and it was even more than exponential, because in the logarithmic scale, it's not a straight line. So it's a convex curve, and so yeah, that's the reason. But the price itself is not what really counts for us, because we want to look to the volatility of the market. And now what you see here in that graph is that volatility, or better to say, the difference between high minus low, and that in percentage values. And honestly, that are huge numbers. I will later, in a minute, I'll show you the comparison to the DAX, and then look to the scale. We have had up to nearly 50%. So changes within one day, within a single day. So it's a difference between high minus low. And for the last couple of months, the overall volatility has been increasing, and you see typical values are 10 or maybe up to 20% difference between high and low, which is crazy. Think about 20% in values of DAX. The DAX at 13,000, that 20% would mean the DAX price would go up and down during one day of 2,600 points. Well, would you trade the DAX if we would have those kind of movements? That's a good question. To get that a little bit noisy behavior out, I used that SMA 30, and then you see a little bit more clear picture here of that volatility. And you see since 2016 there was a constant increase in volatility, but the volatility has been already higher than today in 2013. But nevertheless, there was, during the last couple of months, a steady increase of volatility. So it's a huge volatility within the market. So the 10% is standard right now. 10% in the DAX would mean 1,300 points. Well, that would be moves. And to summarize those numbers, I calculated the overall average for that volatility, or that comparison high minus low, and that's around 5%. And if you do the same with the close, the absolute values of one close to the next day's close, then we are around 3%. Just to get a better feeling, let's look for the same period of time, but now for the DAX, which is more familiar maybe to everybody. So same period, April 2013 up to more or less now. That means yesterday or the day before. In this case, it's once again a linear scale, no logarithmic scale here for the DAX, and you see the well-known trend for the last couple of months here. But the trend is not what we are interested in right now. We want to look to the volatility. So same type of analysis, but now for the DAX. And you see a totally different scale. So absolutely maximum here has been a 6% value, which is not bad, but more or less most of the time we are in the range or below 2%. So it's a totally different picture here. And let's look for the smooth one here, the SMA 30 on that. Then you can see that a couple of days ago, we have been at a really extremely low volatility within the DAX. It's not long ago here. We now back at around 1%, which is, it's not high. We have had much higher times here, about double that, those values. So still the behavior of the DAX is quite calm, but those are typical numbers. So same numbers, overall comparison, total average of high minus low is here a little bit higher than 1%, and the close to close is a little bit below 0.8. Let's look in one picture to those numbers. Then we can go already for an intermediate conclusion here between comparison between DAX and Bitcoins. So the volatility of Bitcoins is 4 times higher than DAX, and the close to close is difference is about a factor of 3. What does it mean? If you trade Bitcoins, you need other rules for stop loss setting. Why? Yeah, because of the volatility. So if you would go with tight stop loss distances in percent or absolute values, you would ruin yourself definitely, because within a day there's always what I call noise. That is, noise means prices wiggling around a little bit, going up, a little bit going down. In this case, those amplitudes are that huge, and you can scale everything with that factor of 4 if you compare DAX and Bitcoins, that you need definitely um, bigger distances for your stop loss setting. Same is for time frames. If you go for too small time frames, and typically if you go down the road smaller time frames, then you would apply smaller stop loss distances, then you are kicked out of those trades. Good. Just a question mentioned here in the chat. Is it possible to trade Bitcoins with JFD in the near future? As I mentioned already, it has been possible last year. Then it has been stopped, not by JFD, by the liquidity providers. But I'm confident that they will pick up it once again. And in a few minutes, you will see what has happened and why they have stopped. At least my interpretation, no knowledge about that, but my interpretation. And what has now changed, nowadays they could hedge themselves at the Chicago Stock Exchange, and because you can trade even futures on Bitcoins now. And since this is now possible, I assume, once again, my interpretation, that they will start trading Bitcoins once again. And then, of course, JFD will pick up as well. So we should avoid too small time frames. But we will see a little bit more about that when we go for the next topic. The next topic is here. If we trade Bitcoins, we have to know what about the spreads. I repeat myself during my webinars, I know, but spreads are extremely important. Everybody should know if you open a trade, you are instantly in the minus in the millisecond of opening the trade. And the reason is a spread. Sometimes we forget that fact. Trading Bitcoins, it was more than visible. Just an example, because it's already here on the slide. And then I will pick up my statistics starting in November 2017, when it has been possible to trade Bitcoins at JFD. What was not unusual have been 100 points spread at a price level of 13,000. And that was normal. And you will see later even higher numbers. What does it mean? Just compare to the DAX, then you know how important the spread is. The DAX is at 13,000 and we have a spread of 1 point. So a typical spread of Bitcoins have been 100 times. More or less, that means if you open a trade with 0.01 lot, that trade is at -€1 when you open the trade, if the spread is around 100 points, at least more or less. Would you trade the DAX with 100 points spread intraday with small stop loss distances? Wow. So you see how important it is to look to the spread. And I come already here to that conclusion. It depends really on the final spread we will see when the trading is once again possible, because the spread has a potential to ruin any trading strategy. So we have to keep an eye on that. But let's look here once again to what the statistics is telling us. When it has been possible to trade at JFT, then I always monitor the spread values by my own in order to see what happens around the spread, because the spread is that important for my trading activities. And I have a little bit more history than the 1st of November. I think it started in September already, but for a long time it has been boring. Spread was around 20 points or something like that. And then you see, starting with more or less December, steady and huge increase in spread. And now let's look to that fact from the perspective of what we learned during last webinar about brokerage. And you learned that I don't like market maker that well. Therefore, I like JFD because they have a pure agency model for trading, meaning all the trades are processed to that liquidity pool. But that liquidity pool is once again something like a market maker. But the good is there are 20 banks in one pool, and they compete against each other. So only the one with the best offer for your trade gets your trade. And that's good that they compete around your trade. And now let's look back what happened during December. Trading was possible, and my assumption is that most people did exactly right, and that was trading long Bitcoin USD or Bitcoin Euro. So a lot of traders opened long trades. Finally, those trades ended up at those big banks within the liquidity pool. And price went up. So it has been a minus for them, a huge minus. And at that point in time, they could not by themselves go to Chicago and go and open at the future stock exchange future contracts was long. So your profit was their loss. And what they did was they increased spread. That's at least my interpretation. And you see what happens in the last stage here, nearly 1,000 points spread. Compared to the DAX, 1,000 points spread. So you open a trade at 10,000 and instantly you are 1,000 points in the minus. Wow, what a story. I think nobody would trade anymore the DAX if we would have a spread of 1,000. So we need back to, spreads here around values like 20, 30, 40. And you will see later when it comes now to the trading strategies, what I did is to apply a simple rule. I put spread to 0.5% of the price, simply because I have no idea whether maybe the bitcoins is going back to 1,000 or maybe it's going up to 100,000, and I don't care, but I'm sure that the spread will be not constant, and therefore I apply that new rule, having spreads percentage wise when we go for the trading strategies within all our Excel sheets. But that's a nice story here, that huge increase in spread within days. And I think it was a protection from that liquidity pool, from those banks behind, to protect themselves against additional losses and to make it not that attractive to trade long on Bitcoins. But I don't know. That's simply my story. So we know about spreads, that's good. And it's always important to have a view on spreads when it comes back to opening trades for Bitcoins. So we have to check when it's once again possible to trade Bitcoins. We have to check the spread because that has to be part of our trading activities and part of our calculations. What we do now in the next couple of minutes is we simply check, and will be a little bit fast maybe, I know, for 3 trading strategies which have been introduced already earlier. And we simply take our prices, our historical data of Bitcoins starting from April 2013 and put those historical data in our well-known Excel sheets with those strategies. Yeah, we change a few parameters and then look whether we can trade them profitable or not. And the 3 strategies are mean reversion. What does it mean? Just in brief. Mean reversion means you take a chart, you put an EMA into the prices, and then you have a distance between your actual price and that EMA. And if that distance, that deviation from the actual price to that EMA is huge enough, and huge will mean there's a certain threshold, which is a parameter within that strategy, then in the normal mean reversion strategy, if that deviation is, for example, to the north, so the actual price is much higher than the EMA and now exceeding a certain threshold, then we open a short trade. The idea is that the price goes always back to the mean, and the mean in our case is simply the EMA. We will see that originally that strategy does not work for Bitcoins. And if you look a little bit more close to the charts of Bitcoins, then you know, no, that's not the way Bitcoins behave. Bitcoins, they tend to accelerate. They tend to move even further. So if Bitcoins breaks in one direction, then it will go in that direction a little bit longer. That means we simply have to reverse our mean reversion strategy in a way that when it comes to a huge deviation from the mean, from the EMA, and that deviation, for example, is to the north, then we open a long trade and not a short trade, which has been the original idea. So that's the mean reversion. Then we have something which is slightly martingale, and once again, we have a German word here. And slightly means that we open a trade and we will not just double our position. And it simply depends on the risk reward ratio we use in our strategy. And you learned about that, I think it was 4 weeks ago, about that kind of strategy. So we open a trade, and if that trade is a loser trade, then we open once again a trade, but in the opposite direction. And it depends on our risk reward ratio of those trades, how much increase we apply for our risk. And we learned that the higher our risk reward ratio is, that the lower we have to multiply our risk. Once again, all the details you find in the recordings of those webinars. And finally, we have a price action strategy, which is already from the name a good hint that it should work for Bitcoins. And the logic here is we measure the volatility by measuring the ATR. And for a given open of a new candle, we put two orders in the market, one buy stop to the north in a certain distance from the open of that candle, and a sell stop to the south in a certain same distance from the open of a new candle. And those pending orders, those stop orders, the idea behind is if we have a real action, so a price action in one direction, then it will go on. And that's a brilliant idea for trading Bitcoins. And you will see the equities in a minute. So let's go through those strategies here. And let's start with Bitcoin USD for mean reversion. And you see, I don't go to the details right now, but always, so what's new for those who have seen the same Excel sheets earlier, the main difference here is that now the spread is in percent. So that's calculated in percent. All equities are always in the risk unit R. So you can multiply with any euro or dollar amount. And you see an equity which goes south. We have a few parameters we can turn, like the EMA period, that multiplier, and so on. I don't care about those details right now, but you see that equity goes to the south. And honestly, I tried with other parameters, smaller, higher, but I have not been successful. So as I mentioned already, mean reversion in a way, if we have a huge deviation to the north, then opening short trade is not a good idea for Bitcoins. But doing the exactly reverse is a good idea. And that now looks this way. So now we get an equity which is quite well. And we can change those parameters, we can optimize them further, and we get very good equity lines. For example, this one here has a total sum of 200, nearly 240 hours profit, with a maximum drawdown of 24 hours. That means we have 10 times of our maximum drawdown as being our profit, which is really a brilliant strategy, and that within 4 years. We can change the parameters a little bit further and try to optimize those strategies. I have done this. You know that normally I do all my work here in called LibreOffice and not in Excel, but that kind of optimization I use from time to time, that solver within Excel, and then we get an equity finally, which looks like this. It's even a little bit better. Sum of R's profit is 260 at 18 maximum drawdown. Not that bad, especially during the last couple of months. So for about 1 year, we have a huge increase in profits for that kind of strategy. So it's worth to go for that. Next strategy was this slightly martingale approach. As I mentioned, the higher the risk reward ratio, and that is this CRV, is in German, in English, risk reward ratio. In German, it's Chance-Risiko-Verhältnis, therefore the other letters. But with a risk reward ratio of 8, our lot increase is totally different. We don't have to double when we have had a loser trade. We only have to multiply our original risk with a factor 1.125, so it's not that huge. And you see already here that right-hand picture, that is a multiplier for the lot size, and you see we go up to 3 times the value of our original risk, which is not that bad. And then we get a really very nice strategy for Bitcoins once again. Yeah, and the best one I showed directly here in Excel is the price action strategy. Yeah, that's nearly a straight line in equity. So we have about 200 R's profit with a maximum drawdown of 10. So that's a factor of 20 within 3 years. And it's an easy strategy. It would mean at the beginning of a candle, we place those 2 orders, which is named here range max, range min. It's just placing those 2 orders in a certain distance, being a multiplier on that ATR 22, and that's all. And then the trade is running with a certain risk value, certain stop loss value, certain risk reward ratio, and we are done. So the strategy behind, I think it was a webinar close to Christmas, and there you find the details of the real strategy behind. And that's called price action, because if the action goes in one direction, then the assumption is it goes further. And that's exactly what Bitcoin is doing. Because of that high volatility, the volatility is not totally random. If a move comes, then the moves goes on a little bit longer in one direction before it starts turning once again. But that's then enough already for a profitable trade, and that's exactly that kind of price action strategy. 3 strategies, and all are based on other logics. We have derived those strategies for DAX, for Euro, US dollar, and we can apply the same logics, but with other values of parameters. Of course, we need other stop loss distances. And since in this case, for example, stop loss distance is based on ATR, we have already that huge volatility incorporated in the strategy, and therefore that kind of strategy works here that good. That's nice. And let's go for a summary here with three different kind of strategies. And yeah, in a nutshell, Bitcoins are really highly volatile. That we have to keep in mind always when we trade Bitcoins, especially when we trade discretionary approaches for Bitcoins. You know, tight stop losses will be a disaster. I can promise you, I can even guarantee that this will be a disaster for any trading. Especially having in mind that the spreads involved are higher than for any other CFD or currency pair, any forex pair. So we know that we have to incorporate those costs in our trading activities. We have to incorporate the spread values if we set stop losses. And keep in mind, for example, 100 points spread, and even if it goes down to 20 points compared to the DAX value, then you get a feeling of what it means for trading. I cannot think about a DAX trade intraday with 100 points spread. So let's see when it comes back to the possibility of trading Bitcoins at JFD, the final spreads, and once those spreads are not done by JFD, they come from the liquidity pool as well. So we have to monitor those spreads, and then we can decide whether to go or not to go for any trading activities. Why can we trade Bitcoins profitable with known strategies? The reason is simple, that the moves are high enough that it balances the costs, and that finally we can turn that even to profitable trades. So if we are on the right side, then the move is that big that we can get our profits. If we don't have those high moves and still huge moves and still would have the same kind of costs, then it would ruin our trading with any strategy. And that's also the reason why we should avoid, at least as long as the spreads are on those levels, we should avoid smaller time frames. Mathematically, you can boil that down to if you translate the daily volatility down to an hourly volatility, that would be around 1%. And you remember, 1% compared to a spread of 0.5%, that cannot end up in profitable trades. So it's always a balance between spreads and volatility, which opens the door for any profitable trade. And therefore we have we need a close view on spreads as always, and especially if it comes to Bitcoins. If you have any further questions, and don't hesitate, just send me an email to s.friedrichowski, I know a very complicated last name, at jfdbrokers.com. And but be aware that the next 3 weeks I'm on holiday. I'm in Cambodia, so maybe I will not answer that fast as normally, but it's my yearly holiday, so I think you can apologize for that. But holiday is a good thing as well. And in February, we start our next kind of webinars. We go for candlestick formations and what was the other topic? Candlestick formation and another one. Today I wrote them down, the two titles, but I simply forgot the second one. But be curious. It will be interesting, definitely, hopefully, and I hope you enjoyed this webinar as well, and you will find the recording soon on the JFD YouTube channel. Okay, have a good time, and thanks for participating in that webinar. Bye-bye.